Hello, trading is closed on the 21st of January 2022. We always begin with our disclaimer. It's my trading plan for Monday, January 24th. Please remember it's just a plan. I can be wrong, and any trade you take should be at your own risk. We looked for the pattern with the early low, which this is, and Monday I'm looking for another pattern with an early low. We said it was quite likely based on futures we gap down, and if so, I didn't have any nearby targets that would hold. Here's what we said. But the crash could continue, take us much lower before ending. These are my calls for the daily patterns of next week. We do get to cross one more MEJT target off the list, 44.2965. Target's over 3 months old. The market never forgets it. It isn't just a target, it's support. And now we have broken through support. There might be some support from this green line, which is the FOMC price at which the announcement was made in July, but that support isn't obligated to hold either. During the day, MEJT gave us a sell signal, and that's already played out. This line here is Tom DeMark's TDST line. It's a support level. Support extends 2 and 1 bar under that line. So we have support at 43.6380 and 1 bar under it, but there's nothing requiring the bar under it to be short. So we'll just say we have support at and under this level. We keep crossing MEJT targets off from last year. The next support level given by the system is 43.4529. There's support at and just under that price, which is compatible with the price of the TDST line. So it's possible that somewhere in the middle 4300s we'll have support which at least over the short term has a chance of holding. Well, this is our long-term count. We're going to stick with it as long as it remains plausible. We're looking for some prices down in the 2900s, but obviously not in the straight line. But it tells us that no matter what happens over the short term, we have much lower to go on the downside. This is the last leg up. It's a couple of years old. We've undercut prior lows, undercut a prior high. I think it's the right count. Let's focus in on what's happened since this high, which we're calling an ABC, and we're now in wave blue C down. At this point, you can't be certain of the count, but it looks like an impulse. So we're going to try to count it in 5 waves. We started out with 5 waves down for 1. Then we have wave black 2. We're in black 3. We have 1 and 2. And this 3, even though it looks a lot smaller than 1, it's pretty much the same size. Might be a few pennies longer, so it won't be the shortest wave. It suggests, if this is the right count, which we don't know, it suggests that once you complete waves 4 and 5, that will complete black 3. That won't complete blue C. So if that's the right count, you still have a bit longer to go, even though it doesn't mean you have to drop in a straight line. I don't think this drop is wave 5 because it's overlapping rather than impulsive. the impulsive waves look like this. They don't overlap like this. So if I'm right about that, at some point there should be a wave C up to complete 4, and then the wave 5 down would complete black 3. The other possibility is this isn't 3 but only one of 3, and after the move up you get a wave 3 down to a multiple degree, which is when crashes occur. I can't rule it out, but the fact that 3 and 1 are pretty much equal, I think argues against it. These ratios don't typically happen by accident, and even though it's not ruled out, I think that's the more likely count, but I have to admit it's not the only one. So if we do go up and start to crash, it would be a wave 3 of multiple degree, but I'm looking for a kind of a stub like a wave 5. We do finally have a volume spike in the E-mini contract. These spikes occur in close to lows in terms of time. They aren't precise, but they're usually pretty good. The catch is we could have a higher spike on Monday. You don't know at this time. It's only after the spike's over that you know. But usually when you get close to 3 million contracts like this, in terms of time, you're usually pretty close to having a bounce. Well, Monday's pattern has the early low. I still think we could gap up. Doesn't mean we will. Dropping all day on Friday nearly always follows through Monday's open. If we gap up smartly instead, it would be positive over the short term. In terms of time, I think we're getting close to a low. There's a volume spike in the E-mini. Occurs near lows, but there's no assurance we won't get an even higher spike Monday. Volatility index printed a bar completely over its upper Bollinger Band. It's a sign of extreme pessimism, and once you reverse back through the band, it gives a buy signal, but that hasn't happened yet. Nasdaq McClellan oscillator is under its lower Bollinger Band. It's a pretty good sign of a low once it reverses back through, but that hasn't happened yet. In terms of price, I can't come up with a count which says the wave down's over. We shouldn't drop without some kind of recovery first, as the last move down was overlapping and not impulsive, so I don't think that's the fifth wave. If we gapped up and immediately reversed, it would break the follow-through rule, but if it happened fast enough, I just forgive the indiscretion. And if that happens, we could complete the decline as early as Monday. However, you can't rule out crashing in a wave 3 down to multiple degree with much lower prices. Bottom line, I think we're near a low in terms of time, but not necessarily in terms of price. There is support in the middle to low 4300s. Doesn't have to hold, but that's the next area where I'd look for support. Monday's pattern has the early low. In terms of time, I think the decline's going to take a rest pretty soon, but in terms of price, it might be much lower before that happens, and that's today's call.